Hello and welcome to Gold and Silver Assets. It's Sunday the 2nd of February 2020. So today we're going to look at gold, silver and GDX charts. And there's some things I've spotted on these charts that have given me some pause for thought. And so I'm going to talk about some of the things that are bothering me about these charts. So we'll start with gold in US dollars on the weekly scale. And we can see that we remain well and truly in an uptrend. We've broken out from a 6-year base, and there's plenty of fundamentals out there that do support higher gold prices, certainly in the long term. But of course, nothing goes up in a straight line. And so during these bull runs, it's useful to pick out where pullbacks and short-term reversals are going to occur, as these may provide buying opportunities. Now, we ended the week with a very strong green candle, and so far there's no signs to suggest a reversal is imminent. However, we need to just watch and wait until new evidence comes to light. Until then, we have to assume the bullish thesis and that we continue in an uptrend. Let's look at gold on US dollars on the daily scale, and we can see that price has been grinding up within this channel that we spoke about last week. I also discussed this long-term band of resistance that again dates back till the 2011 to 2013 period. So this upper part of this band is at 1622, and that provides strong resistance. And the 1558, which was initially overhead resistance, seems to now have become support. We also have this top of this channel line that we saw in the last chart, and interestingly this does coincide with this upper resistance line as well, so we do have a confluence of resistance over here. Now, one thing that does bother me is if we look at the RSI. So over here I've drawn a trend line in the uptrend of the RSI, and we can see that this broke over here. Then it's trying to go up again. Now, this isn't always a reliable indicator, but sometimes a break in these trend lines can be an early signal of either further consolidation or potentially a correction. But as I said, this isn't a hard and fast rule, but it's something to watch out for, particularly when we've got this combination with this overhead resistance here. And if we zoom into gold in US dollars on the 4-hourly scale, this is the channel that I drew last week. I've just simply extended the lines because this sideways movement has actually gone on for a lot longer than we expected it would. So we need to basically watch for a breakout either upwards. So we're looking for a breakout above 1594, or price may turn around and we would need to look for a breakdown below, I would still say, the 1558 level, because that was our previous long-standing level of support. But any break below this channel with a close below the channel would suffice. If we were to break above 1594, then, as I said, we do have this confluence of resistance, and we also have this previous high at 1610. So the barriers will be around the 1610 level and the 1622 level. And so I would watch what happens to price if we break out above this and reach these levels. I think at the moment, it's difficult to say, but I think there's a low probability that we're just going to shoot straight through here unless we have an event that occurs in the week, basically. Now, interestingly, this target of 1622 would actually fit with roughly the height of this channel, and so an upward breakout reaching this target and then possibly turning around would fit. Now let's move on to silver in US dollars on the daily scale. And silver has been lagging gold. Now, in the last few days, we did have a very decisive drop in silver, but then it actually recovered very decisively as well. But it still hasn't overcome this this downwards line, and so we're still getting lower highs and lower lows, and so we've got to bear that in mind. So we've got this smaller channel here, but we've also have this larger channel that we're looking in the longer term. If we do see that upwards breakout in gold, then I think silver's likely to go to around the $18.60 area. Whereas if price turns around at this upper line and actually goes below $17.20, then that would be bearish and that would open up the $16 level. But at the moment, I'm still expecting a little bit more upwards movement based on what we're seeing in gold. And finally, let's look at the gold miners. So this is the GDX chart. So what bothers me about this chart is, first of all, GDX continues to lag gold. So we're actually still below the 2016 highs, whereas with gold, we're well above the 2016 highs. We seem to be forming what might well represent a triangle here, but the interesting things that I'm noticing here, first of all, we do have a gap over here. So that was in 2013, and to this day it still has not been completely filled. There are some partial attempts to fill it, but there was obviously some resistance there. And so the question is, will price go up and break that resistance, in which case a break and close above 32 would open up a big move up to 39. However, having said that, we also have a gap over here, so that's around the 21 level. So remember, we're on the weekly scale here, and gaps aren't guaranteed to fill. Obviously, we've seen here that this gap in 2013 never filled, for many years. So we need to remain open-minded about this. However, this is quite a recent gap. And of course, if price were to come down, then that could open up the possibility of another touch in this trend line, and that would give us a great big push higher. The other thing that I'm concerned about with the GDX is that we've got to remember that these are still stocks, and we can see in the general stock market there seems to be some weakness. Now we'll have to see what happens with that, but if we do get major drops in the general stock market, then gold miners can be quite badly affected as well, and so we must bear that in mind as well. So the thing to watch in the next week or two will be to see if we can breach this upper trend line here at around the 31 level, and more importantly, a break and close above 32 would make me much more confident of a larger upwards move. So I just want to say thanks to all my listeners and subscribers, and if you haven't already subscribed, don't forget to press the red button below. That's all for today, and we'll talk to you again next week. Bye.